Hey everyone, good afternoon. Sorry for the delay. Experiencing a bit of technical difficulty in getting things started, especially when it comes to the CPE questions. But in the process of getting that all worked out, so in the meantime, we figured we'd get going. And so to kick it off, thank you so much for joining us today. We're here to talk about some non-for-profit basics for board members. My name is Izzy Tannenbaum. I am a partner at Withum's National Tax Service Group and focus in not-for-profit organizations. My background is about 20 years in public accounting, really always focused on dealing with all different types of not-for-profit organizations and helping them deal with their challenges and grow and shift as the economy does in turn. And again, really happy to be here with you all today to talk about some of the basics and the issues that we see with our clients and in the industry, and hopefully give you some good guidance and takeaways that will help you in your role as board members and in not-for-profit organizations. And with that, I'll turn it over to Amanda to introduce herself and kick us off.
Perfect. Thanks, Izzy. All right, wonderful. So welcome, everyone. Good afternoon. My name is Amanda Rahman. I'm a senior manager here at Withum. I have been in public for about 10 years now, focusing in the not-for-profit world, specifically on foundations heavily. And as Izzy said, just excited to kick this off and get it started. So we'll jump in right away and we'll talk just about some objectives and really what we want to communicate and share with you today. So first thing we're going to talk about is just forming a not-for-profit. So starting from the beginning of time, what do you do in order to form a nonprofit? How does that get started? And all the corporate legal documents that are required. From there, we'll go into some corporate governance basics, just to give you some good information on, best practices within the industry. We'll move along to some basic financial reporting, just to ensure that you have what you need to jumpstart, looking into your organization's financials and understanding them. And then from there, we'll finish up with Form 990 and some various tax considerations. So just some information before we fully get started on Withum for any of you that are new to our network. So we are a firm of about 220 team members at this point in time, the 22nd largest firm in the United States. So we have about 25 offices throughout 14 states and some offices abroad. As an industry practice, specifically for not-for-profits, we have about 100 team members working on just over 1,000 not-for-profit organizations. So a pretty wide reach within the industry. All right, so just to start about forming a nonprofit and really what that means, how you go about doing that if you were to want to do so. So first, let's ensure that we have a good understanding of really what a nonprofit is. First and foremost, they are organized or incorporated under state law, so it's not organization under a federal law. And they are governed but not owned. So they are governed by a board of directors. Many of you may be one, not owned by any indirect or direct person or group of people. In order to have a nonprofit, you are required to request and obtain tax exemptions. We'll talk about that a bit more on the next few slides, but that is a document that is received from the IRS, allowing you to be a nonprofit, a tax exempt organization. And then once tax exempt status is granted, the organization does have various conditions that must be met. So a couple of things to consider, and we'll talk about some of these things in more detail. But first and foremost, the timely filing of your 990 and any other state documents are really important. There is a 3 strikes and you're out rule here, meaning that if you do not file that 990 for 3 consecutive years, that status will be automatically revoked. So just something to keep in mind. There are transactions that are prohibited. So you will want to take full note of various things that you should and should not be doing. The number one thing being self-dealing transactions. So anything that would benefit an individual or a group of individuals. And then finally, carrying out activities in line with your mission. Obviously, you are developing an organization that has a mission, has various programs. You just want to make sure that what you are doing business-wise does carry out that mission. There are some transparency requirements as well. Nonprofits do have a legal and an ethical obligation to their constituents. So you want to ensure that all the activities that you're doing are remaining transparent and you're having full accountability. And I know that Izzy will talk about this a little bit, but obviously your 990 is one of the ways that you can be fully transparent with the public and with the government. And then finally, nonprofits do have a requirement that no assets or income can directly or indirectly benefit an individual that has a close relationship with that nonprofit. So ultimately, the 990 has a bunch of different disclosures that will go into related party transactions, which I think Izzy will touch on more lately. But just want to ensure that you're understanding that that is something that's scrutinized and looked at by everyone involved. All right, so physically, how do we actually start the nonprofit? Step number one is really your incorporation. So again, that will go directly from the state level. In order for an organization to be formed, articles of incorporation must be filed with the state. And usually you would hire a lawyer or have some sort of consultant help you do so. Around this time, you'll also usually develop organizational bylaws, just setting out what the organization is about, their mission, their board makeup, all of that various information. And once the organization is incorporated, it's necessary to then apply for that tax exemption that I talked about from the IRS. In order to do so, you will be filing a Form 1023. That form will be sent into the IRS, and then you will hear back from them with your exemption in way of a determination letter. And I will be upfront that usually there is a bit of a time lag. I think 3 to 6 months is pretty much the bare minimum from the IRS at this point, although COVID has modified that a little bit as well. But just to let you guys know, it does usually take a little bit of time to organize that. Next, you'll then register in the various states, and it's important to know that these are the states that you intend to solicit contributions in, so it should be something that's done preemptively, not after the fact, just so that you're ensuring that the various states get all the information that is required of you. And it is important to note that each state's process is going to be different, so it's really important to understand the states that you are doing your solicitations in and having activity in, and ensuring that you're following those individual state laws and regulations. And then finally, the organization must then remain compliant, right? So they have all the various tax filings, specifically your Form 990 from a federal standpoint, which must be filed annually. You'll then also have state requirements, as I said, usually in the way of an annual filing. And this may trigger various audit requirements. So it's always important, again, to understand from a state requirement what's expected of you and what must be filed. So apart from the legal documentation that must be sent in, there's obviously a bunch of other documents that will be created and housed within the organization in order to help you do your work and develop that organization as a whole. So first and foremost is the development of a mission and a program. That is, the number one thing about the organization. What is it that you're going to do, and how are you going to carry that out? What programs are you going to have to accomplish that mission that you're looking to accomplish? And in order to do so, there's various other plans that may fall behind that, including marketing. So when we're talking about your mission or your service, it's really how are you going to get your word out? How are you going to communicate that message? Who are you going to talk to, and how are you going to go about doing that? You will also have an operational plan. So that is what the day-to-day is. Who's going to do what within the organization, and how are you actually going to accomplish the various goals that you look out to accomplish? A financial plan, obviously, which is what a lot of my portions and Izzy's portions will look like in this this webinar today, relate to creating your budget, having your revenue streams, your costs in line with that, and then reporting back on that. That's obviously a very important part of your organization. And then finally, your impact, understanding the change that you wish to create, and then the objectives that you're going to have in order to create to meet those objectives. And in order to do all of this, it's important that you have a really good leadership team developed. And that's going to be comprised of your staff members that are actual employees, as well as your board members. And one thing I will say, it's very important to understand the technical skills that's required of all those individuals. When we're looking at board members, there's obviously various things that would benefit. So an accountant, a lawyer, those types of relationships that you should be considering when you're developing that board to ensure that you have all the help that you need. And then last but not least, setting up the financial records and the budgeting is a really important part of the beginning portion of your organization. We always say that it's a lot easier to set things up correctly the first time as opposed to trying to modify later on. So that's working with your consultants, with your board members to really understand how you put into place the proper financial system to ensure that you are able to report on your 990 in the proper way, or your audit, or whatever it may be down the line. All right, and then polling question number 1. Let's see if we can get this to launch. All right, what role do you play for a nonprofit? Just interested to see who we have in the audience. We have board members, staff members, consultants, or other. Great. We'll give a couple more seconds to gather all our votes. All right, wonderful. So it looks like 34% of you are board members. So super great to have you guys and to educate you a little bit about what that means. We have 32% that are staff members, 12% that are consultants to those organizations, and then 22% that are other. So wonderful. Nice to have you guys. All right, so I will kick it over to Izzy to talk about corporate governance.
Thanks so much, Amanda. So similar to any corporation, board members have legal duties when serving a nonprofit organization. Flipping to the next slide, we can see 3 of the more prominent duties, and that are the duty of care, which means that a board member has to take care when managing the nonprofit's assets, and that includes its people, facilities, any goodwill that it has there generated in the industry, and really ensure that assets are used in a prudent and responsible manner. You have the duty of loyalty, which means that the board member has to put the interests of the nonprofit ahead of their own and make decisions that are in the best interest of the organization and the organization's mission. And they also must recognize and disclose any conflicts of interest. As we're going to talk about, best practices that are actually to have them analyze this and report this on an annual basis. And finally, the duty of obedience, which means board members have to ensure that the nonprofit complies with any laws, rules, regulations that are out there that it's subject to, including that it follow its own bylaws, which should govern its operations, and ultimately remain true to its stated mission and purpose, and that it remains in line with that. Going to the next slide, we also wanted to talk a little bit about some of the basic governance practices. So board governance really being a crucial aspect of running a nonprofit organization. And there are several basic practices that the board should ensure they are following that really helps the organization thrive and can have success in the long run. The first is really regarding having regular board meetings and keeping minutes. These meetings really should be held to discuss important topics, make decisions, and ultimately monitor the progress of the organization. And from those meetings, there should be minutes that are taken to actually document these. And I can tell you that this is something that can, number one, be required in many states. But number 2 is something that in many cases I've seen attorney generals, when they were looking at charities, request these, and they are looking at these minutes and taking away a lot of information from those. So it's important for the board to make sure that they're meeting their fiduciary responsibility by 1, having those meetings, and 2, making sure they're documented in the minutes. Another important practice that we talked about is the conflict of interest policy, where board members have to be aware of and disclose any conflicts that may arise during their board service, and potentially for some duration after. In addition, they should also recuse themselves from decisions that could potentially result in a personal financial gain for them. There are certainly instances where it's appropriate for organizations to transact with related parties or even parties related to board members. However, it's important that the conflicted board member not be involved in that decision-making process and that it be properly documented. And having that conflict of interest policy in place really does help keep everyone on the same page and avoid these issues. The board is also responsible for approving executive director and CEO compensation, and need to ensure that the compensation of those positions is fair and reasonable based on market data, industry standards, and the individual's performance. And this is something that we're going to discuss a little bit more in depth later, but definitely a key responsibility of the overall board. Now, in addition, the board has to review the Form 990 and the audit reports to ensure the accuracy of the information that's provided, and ultimately to identify any potential issues, as well as ensure compliance with laws and regulations, including really those related to maintaining your tax-exempt status. And finally, the board really has to be aware of the risks of the organization and ultimately be part of the process of managing those risks, including ongoing risk management, such as monitoring and reviewing policies and procedures. Are we updating them? Are they current? Do they really reflect how we want the organization to be running? So flipping to the next slide, we wanted to go into a little bit about some of those more prominent policies and procedures, starting with our favorite that we've talked about a couple times already, right? The conflict of interest policy. This is really, again, essential for maintaining the integrity and credibility of the organization, and really ensures that the organization operates in the best interests of its mission and its stakeholders. And I did want to point out as well that when you're looking through the Form 990, you're going to see, and I will point out which ones are questions that actually specifically do get asked on the Form 990, and you will need to be reporting this. And everyone from the general public to donors to watchdog groups will have this information. Conflict of interest policy being one of the most important ones of these. So something to bear in mind, that whether or not you have these policies in place, you will be reporting that on most of them. Whistleblower policy as well. Whistleblower policies really just provide a safe and confidential way for employees and volunteers to report any sort of suspected misconduct or unethical behavior, and just helps contribute to a transparent and accountable organization. And this as well is something that the organization is asked to distinctly mention on the Form 990, whether or not it has this policy in place. Another important policy, document retention and destruction policy. Properly managing these records and data is really critical, and security of sensitive information is often required for legal and other regulatory reasons, certainly depending on what the organization does. There may be HIPAA issues, other types of confidential information issues. So it's really important that the organization, especially the organizations in those more sensitive areas, document this, have a policy, and ensure that it's followed and that the organization is compliant with it. And again, this is another one that the 990 will specifically ask about. Gift acceptance policy is really important because we're seeing more and more different types of gifts, right? I think there was a very stagnant way of giving for maybe a long period of time, and now where we're seeing things like anonymous donations, cryptocurrency donations. Organizations have to be more careful than ever that when the donors and the types of donations that are coming in are more in line with their values. And so it's really important for organizations to contemplate these issues, come up with solutions that work for them in terms of how they're going to handle these types of issues and donations, and ultimately document that in their gift acceptance policy and make sure that the organization is operating in line with said policy. The organization should also have a sound investment policy, which talks about a strategy that aligns with the organization's mission, and ultimately is key to really ensuring the long-term success of the organization. Compensation policy, which we briefly mentioned, is really important, and it's really about having a policy around how compensation arrangements are computed, how we make sure that they remain reasonable and transparent. And again, this is something that is asked on the Form 990, and that's why we will touch on it a little later in a bit more detail. And finally, having a good IT policy is becoming more and more critical than ever. Making sure that you have strong cybersecurity measures and ensuring data privacy is really really critical for maintaining organization sensitive information. And more we're hearing these horror stories of cyber attacks and data loss to the point where it seems like it's not necessarily an if your organization is going to ever experience a cyber attack, but when. And really the best way to combat that ultimate when is to have prevention and take key measures to have the policy in place and make sure that your organization is protected so that you don't have an issue should that arise. So those are really some of the more key policies that as a board member and as an organization, you really want to make sure are in place, and you want to keep evaluating whether they need to be adjusted, whether they need to be updated, and more importantly, that they're being adhered to. And with that, I will kick it back over to you, Amanda, to talk a little bit about the financial reporting side of things.
Great, perfect. Thanks, Izzy. So just to feed us into the financials, it's a question that was posed to me is, how much responsibility really do I have as a board member to understand the financial accounting and the reports that you approve? So ultimately, I do think it's very important, right? You are signing your name that you are a board member, you're a member of governance. So you do need to understand all the financial information that's within this, but I also think it's super relevant to rely upon your consultants, to rely upon other board members that have that technical strength that maybe you do not, to speak with your management. So we'll go through, some basics and really introduce you to all of that if you're uncomfortable. And then I think from there, it's continuing to learn and grow and understand all that information. Before we do that, we will do polling question number 2. All right, perfect. So which of the below do you find most challenging? Finding board members with specific skills, filing all the required documentation with regulators, financial reporting, or some other issue? I'll give you some time to try to get your votes in to ensure you get CPE credit. All right, a couple more seconds. All right, and the poll is closed. So it looks like the vast majority of you, 40%, say that finding board members with those specific skills that we talked about is really the hardest thing, which I think is completely normal, unfortunately. And I think that is what a lot of organizations do struggle with. So it's, it's an ongoing struggle, I would say, where you continue to look for those people, strive for those people. I'd say understanding who those people are first and foremost and what you're looking for is most important. And then from there, continuing to evaluate as that changes. So next, we're going to talk about just some basic financial reporting, just to give you some comfort regarding the financial reports, the audits that are put in front of you. We'll go through some examples, and then at the end, along with other questions that have already come in, I'm happy to answer any specific questions that you might have. All right, so just some basics before we show some examples. So your audited financial statements are used by various parties. It's important to know that that can be an external document, and we'll talk a bit more about who is able to see that on the next slide. The independent auditor's opinion is what certifies that your financial statement is in accordance with accounting standards and principles. So for all these examples, we're going to say that everything is generally accepted accounting principles within the United States or US GAAP. Each financial statement does show a snapshot. So it's a point-in-time picture of your financial assets, liabilities, your revenues, expenses, your net income. So it really is, for one period, 1 year at a time, and a point-in-time picture on your balance sheet. And then as a board director, you are responsible for the corporate governance of the organization, and you can be held accountable for the event of a negative event, whether it be a public relation related event or some sort of compliance failure or fraud. So important to keep in mind as we jump into these basics. So let's talk a bit about who could be receiving your audited financials, because it could go to a variety of different parties. First and foremost, the board of directors, or all of you, would be the first party that would receive these financial statements. Usually the financial statements would be approved by either the audit committee or the board as a whole, depending upon your bylaws. But at a bare minimum, these should be shared within the board of directors, and you should be reviewing them annually or periodically if you get them more often. The audited financials could also be added to a public website. That would be your choice for the most part, whether or not you want that on your public website. But again, we go back to transparency. So you do need to evaluate whether that's something that you want to add and you think that donors will be looking for on your website. Could be a good place to really show off about your organization. Various other corporations, individuals, foundation, and other donors could also request a copy of this. I see this very often when clients are, filling out grant applications or working through a grant award year, and they need that audited financial statement in order to get funding. So many, specifically of the larger grants, will require that or will look to get some sort of audited or third-party financial statement. In addition, if you have bank debt, this is probably the most common covenant that I will see, which does require whether it be an audited financial statement reviewed or some sort of third-party financial statement, just to ensure everything is the way it should be to all of your banks and your lenders. Various federal, state, and foreign governments can also receive your audited financial statements. If you are receiving federal dollars, then that will, trigger a single audit or a compliance audit. So that is a separate component. But even so, if you don't have a single audit, they still may require looking at your audited financial statements and gathering additional information there. As we briefly talked about the state charities registrations, there are various audit requirements there as well. So each state will have a different threshold or a different reason, but they may request an audited financial statement be uploaded or be provided with your annual registration. Various large vendors that you have may also request your audited financial statement depending upon your agreement with them. And then it's always important to keep in mind that when something negative happens, when someone is, looking to find some negative information on you, that also could be something that they are looking for. So while you want to be transparent with your information, you do want to realize that not everyone always has good intentions. So you do want to ensure that you're being safe with that information, as that could be something that is targeted. All right, so let's briefly understand which entities get reported on your audit in your 990. If you have, a consolidated audit or numerous different related parties. So from an audit standpoint, and I will go not super technical, but ultimately, if there's control of other organizations, then that does mean that it would be a consolidated audit for the most part. What that means is that your audit would contain all of those various controlled entities underneath the umbrella of one audit report. And this will be different from your Form 990, as your Form 990 is filed on a legal entity basis. So virtually, if each organization does have a different EIN, that will be filed separately on their own tax filing. So important to note as you're, reviewing the two every year or trying to understand differences here and there. All right, so we'll start going through the financial statement in a little more detail here. And I do have some snippets here of various examples that can be used as well. So the first and the arguably most important part of your audited financial statements is the independent auditor's report. And that independent auditor's report will contain the audit opinion, which is the first thing that most donors are looking for. So below, you will see an example of this report. In this case, this is a clean or an unqualified opinion, which is the best opinion that you can get. There are various other opinions. So just to give you some detailed information on that, you could also get a qualified opinion. What a qualified opinion means is that there is a small deviation from whatever the framework is. So in this case, if there was a small deviation from a GAAP framework, we as your auditors would qualify that opinion and would put that in this paragraph of that letter. You can also receive an adverse opinion, which means that there's a material exception from GAAP. And then it will state that your financial statements are not largely presented in accordance with GAAP, and then it will give the reasons why that would be. And then finally, there can also be a disclaimer. This is what you absolutely would like to try and avoid as an organization or as a board member. Ultimately, what that means is that the auditor needed to stop mid-audit and were not able to finish. There's various reasons why that could have taken place, whether it be a scope limitation and not being able to get information or various going concern issues. But just know that a clean or an unqualified opinion is really what you should be trying your hardest to get. But these other types of opinions definitely do exist within the industry. All right, so the first statement that you will see when you go through your financial statements would be the statement of financial position. This is an example of a pretty straightforward, non-complex organization, I would say, for the most part. And largely what you'll see is that it's made up of your assets, your liabilities, and then your net assets, broken down into lines underneath subcategories. So your assets, and again, this is as of a point in time, so as of or use, I apologize for that. Your liabilities would be what you owe to others or you are not able to use. And then finally, your net assets would be the equity of the organization. So that is a nonprofit term for the assets that have some long-term use to you. That is broken down into two different buckets, which would be with and without restrictions. If you've been working within the industry, more than a handful of years, you'll remember there was 3 different types of buckets way back when, which would be unrestricted, temporarily restricted, or permanently restricted, now kind of condensed into 2. So when you have net assets with restrictions, this is basically saying that some donor, and I want to specify donor particularly, is restricting this funds for a specific use or a specific time period. If you have net assets without restrictions, it basically means that it is up to the organization how they spend those funds, or up to the board. And just a quick note, so this is an unclassified format that you're seeing in front of you. Basically, you'll see this is just showing your total assets, your total liabilities. There is also something called a classified format, which would break that into current and non-current, current being 1 year or less. So if you have a current portion of your mortgage, that's what will be due in 1 year, versus your non-current, everything after that fact. All right, next would be your statement of activities, which is your income statement. And basically what this shows largely is your revenue and your expenses for the period or for the year that is under audit. So first and foremost, it will show your revenue, and it will show your revenue broken out by the various revenue streams of your organization. So you'll see here contributions being the #1 thing, but could also be broken out by all of your program revenue or your exchange revenue. So this would be things like your membership dues, your tuition fee, depending upon the organization. And then you'll also have your investment income or any other revenue streams that you may have as an organization. Below that, you'll have your expenses, and you'll see here this is divided into 3 buckets, program, management in general, and fundraising, and will relate to your statement of functional expense, which we'll touch on shortly after this, but just some definitions more so. So your program expenses will be expenses where your dollars were spent directly or indirectly on your mission. So any dollar that is being spent to really do whatever it is that you set out to do as an organization, that would fall into this bucket. You also have your management and general expenses. This is going to be things like possibly your accountants, your auditors, your general counsel, any of your back office functions, HR functions, that type of stuff. And then finally, you have your fundraising. And really what this is the expenses that you incurred trying to raise $1 as an organization. So this would be your mailers, solicitations, your development people's time, all of those types of things fall into that bucket. And then you will see in this specific example, there are two different columns, one for your restricted dollars, one for your unrestricted dollars. So this does break it down into more information and allows you to see the restricted dollars that came in the fiscal year, and the restricted dollars that were used or were released from those various restrictions during the current year. And then finally, you'll see this is also broken out into operating versus non-operating. This provides, the reader with some information about what their normal operations look like versus one-off or unbudgeted items. So in this case, you'll see investment return down at the bottom. So think of your unrealized market gains just from holding those dollars within various stocks and equities. Other things could go there, such as gain contingencies or one-off things that happened during the current year. So just keep that in mind as you're going through. If you have something particular in the year, you do have the ability to move that down out of your operations. And then, as I said, the expenses tie directly back to this statement of functional expense. And basically, this statement of functional expense can be seen in this form, which is a statement, can be seen in a footnote as well. But largely, this gives information to the readers about the various expense line items. And there's a requirement to show it with natural and functional classifications. So our functional classifications are the three buckets that I previously mentioned, which is your program, your management in general, and your fundraising. Whereas the natural classifications are the various expenses that you and I would think of. So that would be the salaries, the rent or occupancy costs, your travel expenses, the normal buckets that I would say that we would think of. And within this schedule, there are times where you would allocate various funds. So if you're thinking of, your payroll cost or the time that your executive director is spending, there's time when you would allocate that across all the different buckets. So maybe the executive director spends half of their time with program and 40% of their time in management in general and 10% in fundraising. So you would allocate that accordingly. And there is also a requirement to describe how you went about allocating that, whether it was a time card that you used in order to gain that information, or there are other ways that you can allocate. So when you think of your rent, it could be based upon square footage. You have 1,000 square feet in your office. How much is the executive director using versus the development people versus the program people? And you can allocate that way as well. And then largely this will then flow onto Izzy's section in the 990 and provide information within that functional expense as well. All right, and then behind that would be your statement of cash flows. What your statement of cash flows does is it reconciles your net income or your change in net assets in the current year to your change in cash. And I think this is a really helpful way for board members, specifically those that may struggle with an accrual-based financial statement, to reconcile these two, as there are always timing differences. And you'll see this statement is broken down into three different pieces. So you'll start with your operating activities up top. So your operating activities are your cash flows that relate to the general operating activities that are day-to-day for your business. So this is, you're waiting on things to come in from your donors and you're waiting on payments to go out to your vendors, those types of timing differences. Below that, you'll have financing activities, which is not pictured in this example on the page. And that basically shows all the cash flows used to fund the organization's operations. So think of your lines of credit, your debt, anything, bank loan related. And then finally, you have your investing activities. This would be your cash flows used to fund the future of the organization. So that would be your purchase of a building, purchase of other assets, change related to your investment portfolio, things like that. And I do just want to note, so what's in front of you is an indirect cash flow. There is also a direct cash flow that can be used. So if you're looking back at your organization's financial statements and they look a little different within the cash flow, please just note that that is also an option. Basically what that would do is it would show payments from your various donors, or program related dollars coming in, vendor payments going out, and would reconcile that as well. All right, and then last but not least within your financial statement is your footnotes. And really what that does is it gives all the qualitative information behind all the numbers that we previously discussed. So first and foremost, it's going to give the reader the information about how you operate, how you account for all your assets, your liabilities, your revenue, and your expenses. It's also going to draw attention to the specific matters in the financial statements. And then last but not least, it's going to provide required information about any sort of contractual obligations or commitments that you have. So some specific footnotes that I think are particularly relevant, and I will say this is just a small subset. There's many footnotes that could end up in your organization's financial statements. First and foremost, the basic organizational information will be in there. So the mission of the organization, when it was founded, all that type of information will be highlighted. Below that is your accounting policies. So this will state, how you recognize your revenue, what's considered to be a restricted net asset, how many years you hold a computer for as a capitalized asset. Basically just all the various policies that you have related to how you recognize things from an accounting standpoint. Next, you have your liquidity and your financial condition footnote. And I have an example on the next page. But really what this highlights is how many or how much liquid assets you have on hand as of the end of the year, the end of the fiscal period, that will be available to be used within 12 months. So these are assets that you're holding that are liquid, that do not have restrictions related to them. Next, there are various footnotes that would relate back to your investments and the fair value of your investments. That will show how your organization is investing your dollars, how the investments are valued, and the income and expenses related to that. We also have footnotes related to your debt. So this will give debt balances for specific debt that you may have, whether it be loans, notes, lines of credit, etc. It will also give information regarding their maturity, their interest rates, as well as a payment table for 1 to 5 and then thereafter years. You're also required to discuss commitments within your financial statements. So various commitments that would need to be disclosed to your readers would be things like if you're doing a large construction project and that needs to be paid out over the next 12 months, 24 months, whatever it may be, you're required to let the reader know how much that overall project is going to be. Additional things would be employment agreements for large payouts if there was a termination, large travel events, whatever it may be that you're committed to in the future. We also have footnotes regarding restricted net assets. So this is going to give the reader valuable information about what is restricted at year end and what it is restricted for, whether it be a specific time period or a specific purpose. This will also include your endowment footnotes as well. And then last but not least, you have your subsequent event footnote. This is going to outline from your report date all the way back to your end of fiscal period. So from a 12/31, if it takes us 3 months, 4 months to issue your audit, what's taken place that is a material transaction or event to your organization. This could be a new lease, a new debt agreement, a new business combination, or any other material change that would be reported there. And just some examples of some of these footnotes that I mentioned. You have your net asset footnote up top. This is just showing how much is restricted at any point of time and for what purpose, as well as what was released in the current year. You have promises to give footnote, which I actually did not mention down in your bottom left. This is going to outline all the pledged amounts that are due to your organization and really how that's calculated, how it's present valued. And then last but not least, the availability and liquidity footnote, which again is going to outline what you have to be used in liquid unrestricted assets for the next 12 months. All right, and let's do polling question number 3. All right. How comfortable do you feel with your organization's financial reporting? We'll give you some time to vote to ensure you get the CPE credit for being here. Great. Looks like 80% of you have voted, so a couple more seconds. All right, perfect. So it says 58% are very comfortable, so I'm very happy to hear that. And it seems like 34% are somewhat comfortable looking to learn a bit more, and 9% are not very comfortable. So feel free to use everything that we're putting in front of you today, but also you can reach out to Izzy and I, and we're also happy to consult in any way possible. So that was some brief information about financial reporting done pretty quickly, and that will all be used going forward to the 990 and all your various tax forms. So I will flip it over to Izzy to talk about that a bit more.
Oh, there we go. Perfect. Thanks so much, Amanda. Appreciate it. And I know we're running close to time, so I'll obviously try to be as quick as I can, but at the same time, appreciate if you guys could stick around for a couple of minutes more. Otherwise, if there are any questions that we don't get to, as Amanda mentioned, always happy to help. So please feel free to reach out, and our contact information will be shared. So let's dive into the Form 990, which, as Amanda mentioned, is going to take a lot of its information from financial statements. The 990 is the key document for tax-exempt organizations. It helps keep things transparent and accountable to the public. Reason for this being, with public charities, it's public money, and therefore there's a trust given to these organizations, part of the reason the tax exemption is extended to them, and therefore transparency on the use of those funds is required. If you think about it, similar to taxes in a way, where you can pay your taxes to the government and then do want some accountability on how the government is actually spending those funds. So because it is public money, the industry, when it's reporting, is required to provide information on how it used those funds. The Form 990 itself is basically a snapshot of the nonprofit's mission, its programs, its finances, and again, it's out there and it's available for anyone to see. This is a publicly disclosed return. And this is really one of the most critical factors, that these forms are public documents, so anyone can access them and see what the not-for-profit is doing in terms of its expenditures, in terms of its operations. And really, again, this is due to the fact that it is public money. There is trust put in the organization. So we do want to see how the organization is spending that public money, including so far as to be reporting the salaries of certain high-ranking individuals of the organization, something that you really don't see in many, if any, other industries at all. But because, again, this is considered to be public money, the IRS does want full transparency on how that's expended. And lastly, it's important to note that the board members of a nonprofit organization do have ultimate responsibility for making sure the 990 gets prepared and filed properly. So that's something to keep in mind as well. Moving to the next slide to kind of dive into the details a little bit. So organizations that have gross receipts over $200,000 and total assets over $500,000 are required to file a Form 990 every year. I did want to note as well that if you're under that, you still do have to file what's called a Form 990N. It's a very simplified return and a very easy filing, but if you do not file it for 3 years in a row, you automatically will have your exemption taken away by the IRS. So certainly it's important to file that every year, and it's absolutely important to file that at least 1 out of every 3 years. As I mentioned earlier, this form is publicly available. for anybody to see. And bear in mind that includes media, donors, the general public, and it really makes this form the face of your organization to the general public. And that's a really important thing. The information that's reported on the Form 990 can have a huge impact on the organization's reputation in an industry where that said organization's reputation is probably more important than almost any other one, as it can influence funding by foundations, corporations, and individuals. So it's really important to make sure that everything is accurate and up to date and presents the organization's great activity properly to the public at large. Moving to the next slide. Now, I did want to note as well that there is no specific requirement that the organization's board review the Form 990. However, the IRS does have an indirect way of promoting good governance policies. On the Form 990 itself, specifically Part 6, Line 11A, the organization is asked whether they provided a copy of the Form 990 to all members of the governing body before it's being filed, essentially regulation by disclosure. And now this is something that probably 90% of organizations do, or at least mark off that they are doing. So it definitely is something that will stand out because this question's on there. If you mark that you do not do this, not that it necessarily raises a red flag in of itself, but it seems like a pretty easy best practice to have in place. So it's something when I work with organizations who aren't doing this, it's something I strongly encourage and typically a pretty easy thing to implement. Now, the best practice is, even though it's not required, is that the board actually receive this, the Form 990 that is, with plenty of time to do a thorough review. This way they can make sure everything is accurate, in line with their expectations, ask any questions, and receive clarifications on any issues that they may have. Next slide, please. So that said, however, in addition to asking about whether the board has reviewed the Form 990, the IRS does ask the organization to specifically describe its process for review of the Form 990 on Part 6, Line 11B, and ultimately to elaborate and describe that process in Schedule O. So it's really something that, both from a board review perspective and from an organizational best practice perspective, you really want to make sure is taking place, and ultimately that you are reporting that it's taking place and describing the process on Form 990. Now, I did want to add that there's no one-size-fits-all approach to the Form 990 review process. So the policies and procedures and the way you do it can widely vary based on the size of the organization. But at the end of the day, it's most important that the organization develops a policy based on its own unique characteristics that works for it, and just thereby ensures that, given the resources it has, it's properly vetting and reviewing this form. And so we did want to talk, next slide, please. We did want to talk briefly about some special areas of focus on the Form 990 that we want to make sure the board members know that they need to focus on and understand, starting with changes in the organization's purpose or mission. So when this does happen and there is a change, it doesn't necessarily change anything for the organization in terms of tax exempt status. However, if there are substantial changes to an organization's purpose, it is important to use the Form 990 to inform the IRS of this. There's a few places where this would occur. On the Form 990, Part 1, Line 1, Part 3, Line 1, the organization is asked to briefly describe its mission, so any changes there would clearly be reflected. When comparing to a prior year, you would talk about anything new that you'd implemented. And then on Form 990, Part 6, Line 4, it also asks if the organization has made any significant changes to its governing documents since the prior Form 990 was filed. So if, for example, the organization had changed part of its mission or purpose by amending their bylaws or articles of incorporation, ultimately they need to reflect that change on their next 990 filing and report that to the IRS. Next slide. So the next area we wanted to briefly talk about is review of the detailed financial information. Obviously, the 990 does include a lot of financial information, much of it, if not in some cases all of it, coming from the audited financial statements that Amanda just talked about, so I won't spend too long on that. But as board members, there are certain fiduciary duties that come with being responsible for making sure the Form 990 gets filed, including the responsibility to spot any material misstatements or omissions in the financial information reported in the 990s. The good news is that when it comes to this, you are able to rely on officers or other experts, such as outside accountants, to help you provide this information and thereby solve your fiduciary duty to actually produce accurate and reliable information. So you really can rely on these outside experts and still meet your fiduciary responsibilities. And as a final point, it's a great practice to review both the internal financial statements, or if you have audited financial statements, back to the Form 990. I know Amanda did talk earlier about how there are some differences between the two, but it's a great practice to kind of compare the two and understand what those differences are and why they're there. Now, I did want to also point out some key performance indicators, or KPIs, that can provide valuable insight into the organization's financial health and performance. Important to note as well that watchdog groups often review several metrics from the Form 990 when evaluating a charity. Some of the more important ones they look at would be the program expense ratio, essentially looking at the percentage of the organization's total expenses that are going toward its charitable program. Meaning a high program expense ratio indicates that the organization is spending more of its resources on its mission, while a low program expense ratio probably indicates that too much of the organization's resources are going toward administrative expenses. Fundraising efficiency, this is really the amount of money in relation to the cost of fundraising. Transparency and governance is more about the policies and procedures, the charity structure, board of directors and practices. And compensation of key employees, which includes salaries, benefits, and other types of key executive compensation. Now, it's important to keep in mind as well that there's no single ratio or metric that's a perfect indicator. Everything needs context, and every organization has its own story as to why certain numbers are the way they are. But these are always good numbers to know and understand. And if there is a variation, understand why that variation is. So we did want to make sure everyone was familiar with those. Moving to the next slide, we did want to talk as well about, we just mentioned about the review of compensation arrangements. It's really important that the board's review of the Form 990, that each director understand the substantial impact that Section 501c3 has on the exempt organization's ability to have compensation arrangements with both its service providers and other insiders. Typically when you see a news media story about excessive compensation paid to nonprofit executives, the origin of these stories or the detail is coming right out of these Forms 990, which, as I mentioned, does require the detailed reporting of the C-suite, of the name, title, and amount, and how much they earned. So really, this information is readily available. In general, the overlying issue is that an exempt organization cannot confer a private benefit on an individual or entity. So in instances where there may be transactions between the organization or interested parties, it's really, really important that the organization's board, number one, be involved in the process, number two, vet the process, and number three, vote and determine that the compensation, specifically when it comes to compensation, that it's reasonable. There's a lot of different ways this can be done. Even on the Form 990 Schedule J itself, it does offer a few alternatives for how this is done, including salary and benchmarking compensation reports, other types of analysis and reports. But really, as a board member, it's very important to make sure that this process is done, because ultimately it is your responsibility, should the IRS look at this, to say that, no, this is reasonable compensation, and therefore there is no private benefit taking place. Related party disclosures, we also wanted to point out that it's important that board members should be aware of disclosures on the Form 990 related to related party transactions and actually reporting other related entities. Two schedules, mainly Schedule R, which requires organizations to disclose transactions with related parties. Ultimately, these should be reported at fair market value. So I did want to point out that for big organizations or organizations potentially with foreign affiliates, This may even be a transfer pricing concern, and transfer pricing kind of has to do with the prices that the organization-related entities charge between each other. So really something that as a board member you want to be aware of and you want to understand, and understand where this is being reported, specifically on the 990 Schedule R. And then we have Schedule L, which really reports transactions with related individuals, including loans, other financial transactions. Maybe there's a related party that's a service provider to the organization. Those types of transactions would be broken out, reported on Schedule L. And finally, we just did want to say a word on state charity registration. It's important to understand, as Amanda mentioned earlier, that the requirements for registering and maintaining compliance with each state are individualized, meaning each state has their own rules and regulations around this. Typically, organizations are required to register in the state which they operate. However, each state has its own threshold. Each state has its own definition of what it means to operate. As well as the fact that an audit requirement for nonprofits is really not a federal requirement, as mentioned. It's triggered typically by state charities bureaus, depending on the threshold of contributions or other types of revenue the organization receives. So state charities registration is something where we see a lot of organizations maybe don't have a specific understanding of what they need to do. And it's something that as a board member, you really want to understand, because it's very easy for organizations to go out there, do campaigns, end up having nexus in a state that they didn't realize they were operating in, and first find out about it when the Attorney General sends them a letter asking them why they haven't registered. So certainly something to be aware of and understand that your state may have some compliance issues around that. And with that, I think we do have the final polling question.
All right. Last but not least, what is your biggest concern about your organization's Form 990? Timely filing, developing the policies in line with the IRS best practices, or KPIs and public relations? And I apologize that we've gone over after starting a bit late. So I will just mention that we will be responding to the questions via email. So we will reach out with the responses just to ensure that you all can carry on with the remaining meetings that you have on your calendar. And we would like to mention that we do indeed have a not-for-profit podcast. If you're interested in hearing about it, there will be some additional information within the PowerPoint that will be shared with all of you after this as well. But we ask that you give it a listen, or if you're interested in being a part of that, that option is there as well. And with that, it looks like our polling question has reached a minute. So it looks like it's all split between timely filing, your policies and your KPIs, and public relations. So hopefully we're able to give some additional information on all of those various topics. But again, we will reach out with various questions, responses for all of your questions that were asked. But we appreciate all of your time today, and we'll be in touch.